So when you're actually trading the foreign exchange market, you have to trade on a currency pair. Euro USD. If you were to buy Euro USD, you are betting that the euro is going to get stronger than the dollar because the euro drives price up. And if you were to sell Euro USD, you are betting that the dollar will get stronger than the euro. And that is because in the Euro USD pair, the euro is the base of the currency pair, and then the USD is the quote. So basically the euro is what drives the price up, and then the USD is what drives the price down. So if you see the price going up, that means that the euro is getting strong. And if you see the price going down, that means that the USD is getting strong. So if you want to bet on the dollar getting stronger, you have to sell Euro USD because the US dollar is going to get stronger than the euro. And if you want to buy Euro USD, you are betting that the euro will get stronger than the dollar. And this works for all currency pairs across the market. For example, GBP USD. It's the Great British Pound versus the dollar. So if you buy GBP USD, you are betting that the pound will get stronger than the dollar. And if you are selling GBP USD, you are betting that the dollar will get stronger than the pound. And in the foreign exchange market, there's thousands of pairs. I'm talking literal thousands. Like you can have the US dollar against the Mexican peso. You can have the Mexican peso against the Russian dollar. And that is the beauty of this market. There are so many different types of opportunity because there is so much more money being moved than the stock market, than the futures market, than even the crypto market. There is $6.6 trillion being moved every single day because this is a market of the whole entire world, of all the currencies in the world combined in one single market. Compared to the New York Stock Exchange or US 30, you're only dealing with the companies inside of the United States, which can only be so big. So that is pretty much a very entry level of what Forex is. Now there is many markets out there like futures, commodities, cryptos, options, and there's great opportunities there, but nothing compared to Forex. So now let's actually dive deep into actually how this market works and how you can learn everything you need for you to be able to go battle this market every single day. So now that you've seen that there's different types of currencies that you can actually trade all around the world, now there's actually different types of formats that you can trade. There's different types of way on how you can approach these different types of currencies that they all move very different. So to begin with, you have scalp trading, which is known as the lower time frame traders. These are the traders that have the faster movements, that they're in the market a lot less time. They have a higher win rate, but a lot less of a risk to reward. These are traders that usually are kind of stuck in front of the market the majority of the day or the majority of the night, that they have to dedicate hours sitting in front of the computer to just find one little good opportunity because they're only in the market probably within 1 to 2 hours of the market movement, which they can either be winning very fast or losing very fast. And some scalpers can either enter 1 to 3 trades every single day in order for them to make some money or just make back losses from the previous day. Because the majority of the scalpers will lose the majority of the time because they're taking a lot of trades constantly. And scalp trading is actually the most attractive type of trading that beginners kind of approach to it because they just passionate about trading and they want to be in front of the charts as much time as they can. So they approach scalping thinking that's going to be the best way for them to make money. Next, it leads me to day trading. So I'm sure we've all heard the term, oh, he's a day trader, or I know a day trader. Well, it's actually a very common term because it's what the majority of the people that work a 9 to 5 attempt to do. Because for you to be a day trader, you pretty much have to be in front of the markets while you're in a job. So people kind of treat it as their side income. And day traders are usually in front of the markets a little bit less time than scalpers, but they are definitely taking a lot less trades. They would be taking maximum 1 trade every single day, because anything more than that, you fall into the category of scalping. And day traders are a bit more selective when it comes to the trades, and their trades can last anywhere from 1 to 3 days to play out. Unlike the scalpers, that their trades can last anywhere from 1 to 2 hours. So day trading, your trades are actually being held 1 or 2 days compared to scalpers, which is a little bit of a time. Next is going to be swing trading. So swing trading is actually a approach of the market where you are swinging the market, meaning you're just chilling. You're going to be in maybe one position a week, maybe 2 positions a week if you find a good probability trade, and you'll hold it throughout the weekend. So you'll be in the position for anywhere from 4 to about 8 to 10 days. And these positions usually run a lot longer, giving you a lot more profit. And you actually have to do a lot less work. You're probably in front of the market for 1 to 3 hours every other day. You don't have to be involved in the market that much, because as soon as you enter a trade, you're pretty much letting your trade ride, and so it goes in your direction or against you. But swing traders are taking a lot less trades, but they are risking a lot more compared to the day traders and compared to the scalpers. And swing traders usually tend to have the highest win rate because they're being very, very selective on the type of trades that they take, because they're only taking anywhere from 1 to 2 trades a week. And then next is going to be position trading. So position trading is a trader or investor that pretty much enter a trade with a long-term vision. They want to be in the market for anywhere upwards of a month, and they are not looking to liquidate their position anytime soon, because they're treating it as a investment, as a position that they're entering in the market. So they're prepared to be involved for about 1 to 2 to 3 months to just simply have their trade get as much profit as it possibly could be. And position traders or investors, they'll probably take 1 to 2 trades a month, if any. Usually they stick to 1 trade a month because they're looking at the market long term. They're not looking to have any short-term gain, and they're looking to minimize their losses as much as they possibly can. And investors and position traders are actually the ones that lose the least, because even if their positions go into a loss, they're going to continue to hold it long enough until it goes into profit. And if you hold a trade long enough, it will go back into profit. So as you can see, every single format of trading actually scales up on the amount of time that you're actually holding a position. A scalper is involved in the market anywhere from 1 to 2 hours a day. A day trader anywhere from 1 to 2 to 3 days in the market. And you have a swing trader where it's anywhere from 4 to 8 to 10 days. And then a position trader where it's upwards of a month. So every single different type of format in trading, they are actually holding their trades longer, but they're actually taking less trades. So as the formats, they scale, so does the time they hold the trade, but the amount of trades they take is a lot less. And all of these different formats you can actually apply to all of the markets. You can apply it to foreign exchange trading, to commodities, futures, options, crypto, everything that has pretty much a chart with candlesticks that go up and they go down. But the best one, and the one where I've had the best experience and the most success, is going to be Forex trading. That is because it offers the best things that no other market can offer. It has 24/5 access, meaning you can trade Monday through Friday, any hour out of the day. So if you work a job, you can trade when you get out of your job. If you're up late at night, you can trade late at night. If you're up early in the morning, you can trade early in the morning. Compared to, let's say, options or stocks, you can only trade 9 to 5, which kind of sucks, because if you have a job, you can't get involved in the market. You're simply limited to what you can actually do in the market. The next reason why it's my favorite and why I got involved is because the entry barrier. For you to get started in Forex trading, you can start with as little as $100, or compared to the stock market where your entry barrier is going to be $25,000 as your minimum first investment. And I don't know about you, but when I first started trading, I did not have that kind of money, so I simply couldn't get involved. Another reason why it's the most reliable is because you're literally trading money. It's impossible that the currencies of the world simply disappear from one day to another. If that happens, we're in a big problem. But that will literally never happen. Compared to a company in the New York Stock Exchange, they can simply just go bankrupt one day or get sued and you're done for. Or a crypto can pretty much get rug pulled and all your money is gone from one day to another. The currency exchange market is here forever and it is going to be here forever. Countries run on these currencies and they need to do that for it to keep going. For that reason why the currency exchange market only gets bigger year after year. And the opportunities are going to be there forever. And adding up to that, you can actually get involved for free. You can actually test and apply the markets and try and figure out if it's gonna go up or down with fake money. You can use demo money to test your skills and learn it before you actually put real money at risk. And when I was trying to get involved in the crypto market, this simply wasn't a thing. They don't allow you to use this with fake money. There wasn't even an idea. Versus in the foreign exchange market, not only can you access it whenever you want, you can actually test it with fake money, which is actually really cool. And if you don't know what demo is, it's pretty much simulated markets. It's demo, it's not real money. It's paper trading, fake trading, where they just give you fake money in an account where you can get and pretty much go test it out. So if you want fake $100,000 and you want to test out your skills, you can do that. If you have $5,000 to put into the market and you want to test out your skills first, you can create a fake account with $5,000, which is actually amazing. So that way you can actually see how far you can get with demo money, so that when you're ready to deposit your own money, you're ready.